As the markets prepared for the U.S. employment report, Treasury Secretary Scott Bessent, appointed by Donald Trump, voiced his support for a strong dollar. He specifically confirmed that there is no pressure from the White House on the U.S. Central Bank. However, this topic could become relevant at any moment. The fact is that the US president quickly makes statements, and his remarks at the Davos summit last month also added fuel to the fire. Macroeconomic data could also play a decisive role and influence currency exchange rates. Yeah, watching traders' calendar on February 11 and 12. Compared to last Friday's anticipation of a key US labor market reports, the start of a new week looks much calmer. Monday and Tuesday are nearly empty. However, for oil traders and those following antibody currencies, important reports will still be released. These include Australia's consumer confidence and the business confidence indexes. Australian consumers seem increasingly pessimistic about the economy. From November to January, this indicator constantly declined, losing 2.5 points. If this trend continues in February, the Australian dollar, the New Zealand dollar, and oil prices may drop. The business confidence index tells a slightly different story. Although it has been in negative territory for the second month, it rose from a -3 points in November to -2 in December. Businesses also reported significant improvements in the retail trade, which grew for the first time since November 2023. This could cause increased volatility in the Australian dollar. The British pound may also experience volatility as January's retail sales data is released. Given that in the fourth quarter of 2023, statistical data was disappointing, significant growth could hardly be expected. However, December somewhat supported the so-called golden quarter, posting a solid 6.5% increase. If January's figure remains positive, it could be a bullish factor for the pound sterling. Wednesday, February 12, will start with the reports on the U.S. crude oil inventories. Given the U.S. president's policies and executive orders, analysts foresee further stockpile increases. The last two API reports confirmed this trend, with the inventories nearly doubling from 2.9 million to 5 million barrels in 1 week. If this report supports the trend, oil prices will likely decline at least until the U.S. discloses official data. This official data from the U.S. Energy Information Administration will be published 18 hours later. The report may also unveil high figures. And last week, U.S. crude reserves doubled from 3.5 million to 7.3 million barrels. By the end of Wednesday's trading session, this key factor is likely to push oil prices lower. The key report of the day will be the U.S. inflation data. The Federal Reserve closely watches core inflation, which excludes food and energy prices and is less affected by seasonal fluctuations. From September to November, it remained stable at 3.3%. In December, core prices dropped to 3.2%. However, the January figure is highly uncertain. Many analysts expect inflation to rise under Donald Trump's new administration. If the report shows 3.2% or higher, the US dollar is likely to gain value. And this is even more likely because the overall price level in the US reversed from a decline to a rise in October last year. During the presidential election campaign, inflation climbed from 2.4% in September to 2.9% in December. This creates strong conditions for further consumer price growth, possibly starting in January, and the US dollar is expected to increase against most other currencies. Several key central bank officials will also speak over these 2 days, including Bank of England Governor Andrew Bailey and Federal Reserve Chair Jerome Powell. Market participants closely watch such speeches as They can signal future interest rate decisions and trigger currency volatility. So please note that the time of all this publication is set in a GMT plus 3. The next video review of a trader's calendar will be released on a Wednesday, February 12th. So, and now we will follow all above mentioned reports. Subscribe to our channel and follow news with us. See you!